Hi there, Mr. Holcomb here with another episode of The Math Behind the Modules. Okay, Chapter 6-5, Form 1040 in Schedules A and B. All right, so let's first look at the vocabulary. Voluntary compliance. Well, that basically just is, I don't want to pay taxes, but I understand that it's to fix the roads and it's to take care of everything that everybody has access to. And if we didn't have taxes, we wouldn't have these luxuries in our day-to-day lives. So we don't like to pay taxes, but we will because it's for the greater good. That's basically voluntary compliance. Form 1040 is going to be the form we're going to use, since the 1040EZ and the 1040A were no longer used after 2018. They're just using 1040. There are two schedules on the 1040. Schedule A is for the itemized deductions, and Schedule B is interest and dividends income if you trade in the stock market, if you own stocks that offer dividends. A tax credit is simply that let's just delve into that a little bit more than just say it's just that. Okay, so a tax credit is an amount subtracted from an income tax owed. The most popular credits are the child care tax credit and the earned income credit. So when you get a tax credit, you subtract that from what you're owed, and then you owe less. Tax avoidance is when a taxpayer uses a tax rule to lower the amount of tax due. That is a total tax avoidance is definitely something that you should do so you pay less in taxes. And then we get to tax evasion. Well, that's when a taxpayer lies about information on a tax return form in an attempt to avoid paying tax, and that is illegal. And then there's what's called a threshold. Okay, so what is a threshold? A threshold is a level such as down here on this tax. It says if line 6 is over 1,500, you must complete part 3. So if you're under that threshold, you don't complete part 3. So a threshold is just an amount level that we are going to pay attention to. Okay, so with all that being said, let's delve into example 1. Margaret and Brian O'Sullivan are married. They have one child, Carol. Margaret works for a sports cable station and Brian is a cameraman. Okay, most of that information is unnecessary information. What you need to know is that they're married and they have a child, a deduction. The O'Sullivans have combined wages of $96,000. Let me get my highlighter here. $96,521. They also have interest of $812 and $877 from Buffalo Bank. And they have shares that they receive dividends of $440 from General Motors and $1,200 from AAPL, Apple. During the year, Margaret won $300 in a lottery. So that's also considered income. It says find their total income from wages, bank interest, stock dividends, and the prize. So all we're basically going to do is take these two amounts, 812 and 877, and there is a misprint here. So let me fix that. This is supposed to be a 7 here, 812 and 877 from Buffalo Bank. And that shows up on Schedule B because Schedule B is interest and dividends income. So here is the Schedule B. These are the two banks listed and the interest they earned at those two banks, which is here and here. Okay, and then we're going to look at dividends from GM 444 and Apple 1200. So here's General Motors, here's Apple listed, 444 and $1,200 is right there. Now the book did put 872 here, but they meant 877 and they did add it correctly. So this value is okay. So it is $1,669 that they is that right? 7 and 2 is 9, 7 and 1 is 8. That's $1,689. Okay, $1,689. So here it says, add the amounts on line 1. So here's line 1, and you add all of these amounts up. If they had more bank accounts where they earn more interest, more would have been listed. And then it says add the amount on line 1. So you add these amounts, and there they are. Excludable interest on Series EE and I U.S. savings bonds issued after 1989, attached form 8815. They didn't mention that in this problem. And then finally it says subtract line 3 from line 2. And therefore, if this is 0 and you subtract it, you get the same value. Okie dokie. So what are we trying to find? Their total income from wages, salaries, wages, bank interest, and stock dividends, not salaries. Okay, so the total dividends is here. They just added these two up. It's $1,644 in dividends. And so then down here, income, line 7 is wages, salaries, tips, etc. And $96,521, which is what they made, which is right here, is listed right here. And taxable interest is from Schedule B, which is these two banks, interest earned $1,689. So that is accounted for right there. And then taxable exempt interest do not include on line 8A. So we didn't talk about any taxable exempt interest. Ordinary dividends, Schedule B required. It is up above. It is this amount here. Check. And then finally down below 21, we're going to skip all of this alimony received, business income, capital gains, IRA distributions, and so on and so on and so on. If your unemployment compensations, that would go here. Social Security benefits, if you received any, would go there. Nothing was mentioned in this problem. So on to other income, she won a lottery prize of $300. Check. So you take your wages, salaries, tips, plus interest, plus dividends, plus prize lottery, totals $100,000 and $100,154. And that's the answer to problem number 1. Okay, so now it says, check your understanding. A family has $1,123 in bank interest. Must they report this on Schedule B? Explain. So if we go up to Schedule B, okay, here's Schedule B. This note right here says that if line 6, where's line 6? Right here. If line 6 is over $1,500, which is what? These are dividends. What did the question ask? Bank interest. So I need to come up here. I meant this one. If line 4 is over $1,500, you must complete part 3. So 1,500 is what we call a threshold. And at that threshold, 1,500, 1,123 is less than 1,500. So no, the answer is no, they don't have to report it on Schedule B because it is below the threshold amount of $1,500. Okay, example 2 says Margaret O'Sullivan teaches a night course at a local college and has $133 in educational expenses. Okay. The O'Sullivans also had $3,009 worth of moving expenses. These two expenses are deductible. They are deductions. These two expenses are deductions from income. Find their adjusted gross income. So the adjusted gross income form has lines 23 through 37. So 23 says educator expenses. So they listed the $133 here. And certain business expenses of reservists, performing artists, and fee basis government officials, blah, blah, blah. Health savings account deduction. Moving expenses, there it is. There's the $3,009 listed on line 26 for moving. Deductible part of self-employment tax. Self-employed set, simple, and qualified plans. That's something totally different. Self-employed health insurance deduction. It doesn't say that she is self-employed here. It just says they're not self-employed. Where do they work? Sport Margaret works for Sports Cable Station and Brian is a cameraman. Okay, so they are not self-employed. Okay, so anyhow, there's all kinds of other stuff: tuition, domestic production activities deduction, and so on and so on. So you take line 23, which was $133 for her educational expenses and $3,009 for moving, and those total $3,142. So subtract lines 36 from line 22. So line 22, if we go back and look, line 22 is $100,154, and $100,154 minus $3,142 is $97,012. Okay, so that's the answer to example 2 in the form. All right, now it says check your understanding. The Lamberti family had a total income of X dollars. They also had D dollars in adjustment to income. Okay, express their adjusted gross income algebraically. Okay, so that's just simply taking what they made, X dollars, and subtracting their D dollars in adjustments. So the expression is just simply X minus D. Okay. All right, example 3, the O'Sullivans had medical insurance and had $1,880 in medical expenses last year. Okay, so $1,800 medical expenses. Medical insurance covers 80%, and they only have to pay 20% of the medical bills. The IRS allows medical and dental expense deductions for the amount that exceeds a certain percentage of a taxpayer's adjusted gross income, depending on their age. This level is called a threshold. How much can they claim as a medical deduction? Okay, so what we're going to do is we're going to take that $18,800 and we're going to multiply that by 20% times 0.20, and that is going to equal $3,760. Okay, so they're only responsible for this 20%, and that's $3,760. So to determine if they can claim any medical expenses, calculate 10% of their adjusted gross, and their adjusted gross was right here, $97,012. So now we're going to take $97,012 and we're going to multiply that by 10%, which is 0.10 or just simply 0.1. And that's going to be $9,701.20. Okay, so $3,760 is less than the $9,701. Okay, so since their medical expenses do not exceed 10% of their adjusted gross, the O'Sullivan's medical expense deduction was 0. So that's why this is 0. Okay, so we took the 97,012, the 3,760 goes here, the 10% is here, and it says subtract line 3 from 1. Subtracting 3 from 1 would give us a negative. It says if line 3 is more than line 1, which it is, enter 0. Okay, so their medical expenses have to be way higher in order for them to have to pay in, almost triple. So they would have had to have had 36, 46, 56, 54,000, around $54,000 in medical expenses before they'd even have to worry about paying taxes on that. Okay, so now moving on to the check your understanding. Mary's adjusted gross income last year was X dollars. If she had M dollars of medical expenses, okay, M dollars of medical expenses not covered by insurance, express her medical expense deduction algebraically. Well, there's multiple answers to this. Let me start the first one in red. So the first one is going to be the medical expenses, M minus 10% of her income, which is 0.01x. And you have to say if M is less than 10% of her income, then she's going to pay 0. Okay. So if Mary was born before January 2nd, 1951, then her expenses would be different. Then it would be M minus 0.075 X. If M is greater than 0.075 X, okay? And then finally, if M is less than 0.075 X, then she pays nothing, okay? So all this is saying is take your medical expenses minus 10% of your income. If M is less than that income, 10%, then it's zero, like we showed in that example. If she's over that age, it's only 0.075, not 10%, but 7.5%. And that's only if M is greater than 0.75x. If M is less than 0.75x, then it's going to be $0. Okay, and that's to check your understanding. Okay, example 4 says the O'Sullivans paid $5,451 in state income taxes, $6,533 in real estate taxes. They paid $4,111 in mortgage interest. What is the total amount they paid in state income and real estate taxes? So state income and real estate, and they paid mortgage interest. Okay, so here is the form. And so all we're going to do is take that $5,451 plus $6,533 and get $11,984. And this is shown in the form. All it's asking for in this problem is what's their total amount paid in state income tax. So state and local, check only one box. Income, general sales. So line 5 was $5,451. That was the state income tax. Line 6 says real estate tax, and that was $6,533. Down on line 10 says interest you paid, home mortgage interest, and points reported to you on Form 1098 is $4,111. Okay. So the answer to this question is just simply the total taxes were $11,984 as shown in the tax and interest sections. The amount of mortgage interest is entered into line 10 and 15. Okay, so this is the interest entered here. Total those up, and it is $11,984 is all they were asking about, income and real estate tax. So now it says, check your understanding. The Keenan family paid T dollars in state income tax and R dollars in real estate taxes. Represent their Schedule A tax algebraically. Okay, well, that's pretty simple. It's what we did here. All we did was took their income tax T and added it to R, their real estate tax. So it's just simply T plus R. Okay, example 5 says the O'Sullivans gave $987 to different charities. Okay, so we can write off charities. The highest amount they gave to any single charity was $100, and I'll explain that in a minute. They also donated $450 worth of old clothes to different charities. The most they ever gave any single charity was $120. Find the total of their charitable contributions. So it says 16, gifts by cash or check. If you made any gift of $250 or more, see instructions. So there is a threshold of $250, but they did not exceed that. It's $100. And then on line 17, it says, other than by cash or check, if any gift of $250 or more, see instructions. Well, their highest was $120. So they did not exceed $250 on either of these. If they had, then there's other instructions. So this is pretty basic. We're staying below the threshold. And so it says gift by cash or check is $987, which is this one here. And they also donated $450 worth of old clothes, which goes here. So totaling those up, and we get $1,437, and that is the answer to example 5. So then it says Pete donated X dollars. Okay, he donated X dollars to a charity over the last tax year. He also donated B bags of used clothing valued at C dollars. Express his total charitable contributions algebraically. Okay, so the X dollars is like this 987, but then it was like per bag of old clothes. And you say plus, and it's going to be B, number of bags, times C, the amount of clothes in each bag, or the cost of dollars each of each bag. So if it was $500 and 3 bags with $100 in it, 3 times 100 is 300 plus 500 would be $800. So the algebraic expression is X plus B times C. Okay, example 6. The O'Sullivans had $11,230 worth of flood damage that was not covered by insurance. Okay, so it's not covered by insurance, then you can write it off. It's a deduction. But the IRS requires that $100 be deducted for each casualty. So you take $11,230 minus $100 equals $11,130. Okay. So after doing that, then we have to take that $11,130 and subtract that from 10% of our income. And what was our income? Let's go back a few. Where is it? $97,012. Okay. What happened there? Example. What did I do? Okay, there we go. Example 6. Whoops. Struggling here. There we go. Example 6. $11,130 minus 10% of that $97,012. So that is going to equal 11,130 minus 9,710.20. And that is going to equal $1,428.80. So round to the nearest dollar, and they will have to pay one, or their deduction is $1,429. Okay. And that's their deduction right here. Okay, so check your understanding. Scott's adjusted gross income was X dollars. He had 3 different casualties last year that were not covered by insurance. A car was stolen. He did not have comprehensive, so he lost C dollars. A storm caused S dollars in damage, and his vintage violin worth V dollars was destroyed in a fire. Express his casualty loss algebraically. Okay, vintage violin. I can remember a movie that had something to do with that, holding the violin over a balcony railing. But anyway, so what are we going to do? Well, we're going to take C dollars, which were lost in the car being stolen, and there was S dollars that was lost in damage to a storm causing S dollars in damage, plus the violin damage is V. Okay, the violin total loss because it was burned, it was destroyed. So you take C plus S plus V minus $100 for each item. There are 3, so that's minus $300. And we're going to subtract 10% of our income from that. And that's only if our answer is positive. So this amount has to exceed 10% of our income. So there is the expression. C plus S plus V minus 300 quantity minus 10% of our income X. Okay, example 7 says Brian O'Sullivan had $541 in expenses for job travel. Okay. It says this is not for driving to work because that is not tax deductible. This is for traveling in his personal car for work reasons. It is based on the miles covered. Margaret and Brian belong to unions and pay a total of $1,439. Union dues. Brian took 2 college classes related to his employment for a total of tuition of $2,315. Find the miscellaneous expenses deduction. Okay, so job expenses and certain miscellaneous deductions is lines 21 through 27 on the form 1040. Line 21 says unreimbursed employee expenses, job travel, union dues, job education, etc. goes here. So what they did was they took 541 plus 1,439 plus 2,315. And that gave us this total right here of $4,295. Tax preparation fees. If you have your taxes done by a tax professional, the fees that they charge are deductible. So let's say you got your taxes done, they charge you $300. They would put the $300 on this line 22 for you. But obviously we're doing our own taxes here. That's why we're learning this. So that's going to be 0. Other expenses, add lines 21 through 23, and this should be right here, by the way, 429500, because this is 0 and this is 0, and those 3 lines added up are the same thing. Then it says enter amount from form 1040 line 38. That was their adjusted gross income of $97,012. Multiply line 25 by 2%. So 2% of 97,000 is $1,940. And then finally, you take 26 and subtract it from 24. If 26 is more, enter 0. So in other words, if you make a lot of money, these deductions will not count. So the answer to this problem is $2,355. Their miscellaneous expenses deductions were actually this $4,295. And the deduction came out to be $2,355, which is the deductions, the amount that their expenses were minus 2% of their adjusted gross income. Okay, now the check your understanding says Edgardo's miscellaneous expenses were $M. Miscellaneous expenses. So that would be your line 21. So I'm just going to do this up here. I'm going to put a letter M here. His adjusted gross income was $A. That's line 25 right here. Express his Schedule A miscellaneous deduction algebraically. Well, what did we do? Well, we took M, which was line 21, minus 2% of A. So it's 0.02 A. Okay. And as long as M is greater than 0.02 A. If M is less than, then you would enter 0. And that's the check your understanding. Okay, example 8. Find the O'Sullivan's total itemized deductions from Schedule A. So if I go back to example 4, the total itemized deductions, let me highlight these, is going to be $4,111 and this $11,984. So there's your state and local taxes. So that's an itemized deduction. Your interest paid is an itemized deduction. So it's going to be $11,984 plus $4,111. Go to the next step, and gifts and charities are deductions. So $1,437 in gifts and charities. And then I'm going to go on, and this one was casualty and theft losses, and that was also a deduction. And example 7 showed us what we just did was going to be $2,355 for our business expenses, our job travel, our union dues, and our classes. So all those values are going to get added up for this problem. So what it's going to look like if we do it algebraically is going to be $11,984 plus was $4,111 plus the $1,437 plus $1,429 plus $2,355. And when I total all of those up, I get $21,316, and those get entered in line 29. Okay, now check your understanding. The Vlop family took 3 hours to gather information and fill out their Schedule A. The itemized deduction saved them $1,236 in taxes. What was the mean savings per hour to fill out Schedule A? Okay, well, mean is an average. So if I take $1,236, divide it by how many hours, that's going to give me 412. And they save $412 per hour of tax preparation fees. All right. Orly spent $700 on job travel, but this deduction saved her $230 in taxes. What was the net cost to Orly of the job travel? What was the net cost to Orly of the job travel? Okay, so if she spent $700 on job travel, but the deduction saved her $230, then we're just going to subtract. So 700 minus $230, and that is going to be $470. Okay, so $470 is the net cost to Orly of the job travel. Okay, example 9 says, once Schedule A is completed, the O'Sullivans return to Form 1040 to finish computing their taxes. Each exemption allows them a deduction on Form 1040. The amount can change from year to year and usually increases. If the deduction for an exemption is $4,000, find the total amount the O'Sullivans can deduct. For higher income families, this deduction may be reduced. How much can O'Sullivans deduct from their exemption? So what we have to do is we have to go and we have to look at the 1040 form. And as you can see right here, let me get my pen. When we're talking about deductions, it's right here, exemptions. If line 38 is, where was I? 154,950 or less, okay, it is. Multiply 4,000 by the number on line 6D. So I have the 1040 form down here that I copied from the text. It was on example 1, and line 6D is right here, and they have 3 exemptions: the husband, the wife, and the child. So 3 exemptions. So all we have to do for this example is take those deductions times $4,000 per deduction, and that is going to equal $12,000. And that exemption is listed right there. Okay, so multiply by 4,000, those 3, and that is the answer to example 9. So then when I get rid of that, the check your understanding says, the Troviano family consists of 2 parents and 3 dependent children. If the deduction per exemption is D dollars, express that deduction for exemptions algebraically. Okay, well, let's see, let me switch to red. 2 parents, 3 dependent children. That's a total of 5 people. 5 times D. And that is the number of deductions. All right, example 10, the O'Sullivans both work and they pay for childcare while they are at work. They can get a tax credit for $780. They installed some energy saving items in their home and can receive $250 tax credit for that. What is their tax after the credits are subtracted? So what we're going to need to do in this problem is go back to example 9 and look at this form. And it says this $12,000 here is what we just calculated on the last problem. And it says these deductions lowered their income before they looked on the tax table. They looked up $63,696, which is right here, their taxable income, subtracting these deductions, okay? And instead of the 110,000 that they made at the beginning. So now they're only looking at $63,696 as taxable income. Okay, and by using that tax avoidance, their tax found on the tax table turned out to be $8,629. Okay, which is this line right here. So that is the $8,629 that we are going to use in example 10. So $8,629. $8,629. And what we're going to do is we're going to subtract, this is the tax, we subtract the credit. The credit was a sum of two things, $780 and $215. Okay, so that would be $8,629 minus 5. 8 plus 1 is 9, 7 plus 2 is 9, and that would end up as being $7,634. Okay. So their tax after the credits is subtracted is $7,634. And that is shown on line 63 right here. And 56, okay? And now it says the Koski family's income was X dollars. Their total deductions for the year were D dollars. Okie dokie. X dollars and D dollars. They had C dollars of tax credits, represent their taxable income algebraically. Well, for starters, tax credits are not taxable income. Tax credits are not deductions. They're tax credits. So we're not even going to take into consideration the C in this problem. So all we have to do is take their income minus their deductions. Okay, tax credits have no effect on the tax table income, which is computed before tax credits are figured in. So you do tax credits after this value is figured. Okay, Gloria is single. Her taxable income without deductions was $25,760. She was able to reduce her total income by $5,381 when she itemized her allowable deductions on Schedule A. How much did she save in tax by using Schedule A? Okay, so what I want to do here is figure out how much her taxes would be with this amount and how much their taxes would be with $5,000 less. Okay, so for starters, she's making $25,000. So let's try to make this neat. We put a box around with the one we're going to use. And she makes more than $9,225, but less than $37,450. So we're going to use this row right here in the table. 15% tax plus $922.50, because the $922.50 would be the 10% of up to $922.50. So in order to calculate this, we take $25,760. Okay. And we're going to subtract that $9,225 because we only want to do the amount over that. So $25,760 minus $9,225. And that amount is going to be multiplied by 15%. So I'm going to multiply that by 0.15 and then add $922.50. So there is the equation for one. And then if I take $25,760 and subtract $5,381, I'm going to get 9, 6, 15, 7, 3, 0, 2. So then her income is going to drop, her taxable income will drop to $20,379, which is still in the same tax bracket. So that formula is now going to be $20,379 minus $9,225 times the 15% plus $922.50. So we're going to calculate both of these values. One is before the 5,381 and one is after. Okay, so let me get my calculator open. And I take 25,760 minus $9,225, and that gives me 16,535 times 0.15% is going to give me 2,480.25, and I add 922.5 to that, and I get 3,402.75. Okay, if I do the same with this one, and let me do it all at once with the parentheses, 20379 minus 9225 parentheses 0.15 plus 92250, 922.50, and hit enter. I get 2595, $2,595. And I didn't see the change, 60 cents. So now if I take 3402.75 and subtract 2595.6, I get 807.15. So when I subtract these two, I get 807.15. Okay, and we always want to round up. So that would be $808. Okay. So Gloria saved $808 by filing Schedule A with her Form 1040. Since she saved all of her bills, checks, and receipts that applied to Schedule A deductions in an envelope throughout the year, that's a key. Save stuff, put it aside, have a place in your office or somewhere, and have envelopes for every month and every category, and it just makes your taxes so much easier at the end. Okay, so let's see, it says it only took her 2 hours to organize receipts and fill out Schedule A. You can think of this as her using her tax knowledge for 2 hours to save over $800. That's an hourly rate of over $400. So she did pretty good there. If you're organized, it takes a lot less time. So now it says, check your understanding. Denise is divorced with one child, so she fills her taxes as head of household, files her taxes as head of household. Her taxable income was $76,312 before she filled out Schedule A. She had $9,200 in Schedule A deductions. How much did using Schedule A save Denise in taxes? So we're going to do the same thing again. So she made $76,312. So that is going to move this bracket down to our 25 percentile bracket. So I'll just move this up to here. And now we're going to do the same calculations with these new values. Okay, so it's going to be $76,312 minus we're using the new column, minus 37,450 times 0.25 this time plus 5,156.25. Okay, so let's just calculate that one first. So it is 76312 minus 37450, close parentheses, 0.25 plus 5156.25. Enter. 14,800, was it 41? 71.75. Okay, so there's her taxes at that amount. Now let's do it again with 9,200 less. So 76,312 minus 9,200 is going to be 2 minus 0 is 2, 1 minus 0 is 1, 3 minus 2 is 1, and 16 minus 9 is 76. So we're at $67,112 minus $37,450 times 0.25 plus $5,156.25. Substituting all this into my calculator, I will get 67112 minus 37450, close parentheses, 0.25 plus 5156.25. Okay, enter. $12,571.75. $12,571.75. Okay, that's a decimal. Okay, so now we take that 14,871.75 minus 12,571.75, and we get $2,300 in savings. Okay, that's the end of a really long lesson 11, or lesson 6.5, I mean, and have a good day.